Good day everyone, how are you all doing? This is Yix here at Magna Crypto, back again with another video. So in today's video, I wanted to go over a couple of things. Obviously to look at the market, see where we're going. I'm seeing some very interesting price action. But also I want to go over an investing method which some of you might be familiar with, some of you might not, but it's always important to go over it, and that is dollar cost averaging. My favorite. So without further ado, let's get straight into it. So firstly, we're looking at Bitcoin here, obviously the leader of the market. So we got to start with Bitcoin. Now we've had a few days, I think 3 days of red candles, long awaited form of correction. However, I don't think this is going to be it. As what you can see right now, we're looking at the 4 hourly here, and it's starting to form a symmetrical triangle. Now, what do we know about symmetrical triangles? That they are continuation patterns. So the pattern that was here prior to this continuation pattern, which is obviously bearish, is going to most likely, not certainly, most likely will continue. So that means we're going to see some more downside. Now, most of us, or a few of us, have been calling this correction for a little while, and I think it could go as far as 30%. We're going to have to see, obviously, as time goes on. It might just stop a lot shorter than expected and turn around, continue on to go back to all-time highs. But for the moment, it looks like we're going to continue this correction, and what is next below that? We have a level, in my opinion, 15,777. You can see clear resistance here, and then it turned into support. So that's an important level. It's obviously not exact. The exact point would be 15,760. So that is one level of support that I'm seeing, and then where this wick has ended up, which is about 14,300, or to be exact, 14,351. So those two are the next levels that I'm seeing. But if we go further than that, again, which I expect, I think at least, as I said, a 30% correction, which would take us at least to about 13,000, which actually goes perfectly in line, which I think the next major resistance level would be, which is 13,800. And that's because of this wick over here, perfectly on 13,880. And also it was a level that it took a few days to get past. Also, you can see here that we had support here previously just after the bull run of 2017. So you can see clearly that's an important level. So that's where I'm thinking of next. After that, I would say 12,500 and 11,500. So those are the levels that I'm looking at. And as I said, it does look like we're going to continue to the downside, as you saw on the 4 hourly. So let's move over to Ethereum. So Ethereum almost perfectly tapped a previous swing high, which I've marked out for a while now, and that is the level of 1475. It just went shy of that 479 and then went back up. And to be honest, if we look at it from the 4 hourly, it's a similar story as Bitcoin really. You can see slight higher lows. However, clearly it's not able to get past this trend line. So it's forming another symmetrical triangle, and which means it's a continuation pattern, and most likely we're going to see more downside. I do want to stress, however, that these are likelihoods. Obviously, they're not certainties. There's no such thing in this market. But if you look at it, that's what it's telling us. So Ethereum, we could see some similar movement to the downside. So I'm looking at the previous high of 475, and further than that, I'd probably have to say this high point of 438. As you can see here, it was retested previously. Let's have a look at some DeFi coins. Binance Protocol, one of my favorites. I saw a chart pattern over here which looked like an ascending triangle, and I thought this was going to go to the upside. As you can see from these annotations, However, it did not do that. It went to the downside. I had a stop loss at, I think it was 614, just below that, which got triggered. So I am out of that position, but I'm still holding a bag for the long term. But this is what I'm talking about when it comes to there are no certainties in this market. This looked like an ascending triangle to me. However, it obviously went the other way. Most times, in my opinion, ascending triangles are quite reliable chart patterns. However, in this case, clearly it went the other way. But that's why it's important to have risk management in place, and also to never assume certainties. There's no such thing in this market as a certainty. So that's a big lesson. But something I noticed about Band Protocol, on the weekly, it kind of looks like it's forming a reverse head and shoulders. So you can see here, you've got the shoulder, the head, and now it could potentially form another shoulder, and that could complete this reversal pattern. So if we then see a reversal towards this neckline, then I would assume that is a confirmed head and shoulders. But then obviously we need to see a break past this neckline, and then obviously to complete the reversal. But it looks to me like a reverse head and shoulders. So very interesting, and I'll make sure to keep an eye on that and keep everyone updated. Let's have a look at a link. So link, as mentioned in the breakdown the other day, it's still continuing on the downside. As mentioned, I said this looks like a rising wedge. It looked like it was ascending too sharply, and now it's gone to the downside. So if we close below this level over here, I am certain that we're going to revisit this resistance level, and it might become support. You can see the wick went all the way down to that level, so it's an important level. So that's why I expect going forward with link. Now, the thing that I wanted to mention, or to kind of remind everyone about, was dollar cost averaging, especially for those that are new in the market, the beginners in crypto. And a little shameless plug, if you haven't already done so, I've got a free course available which teaches you everything, the fundamentals about crypto and how to get started right away. A link for that is in the description. But this method is very important, not only to beginners, but to more advanced users, and that is dollar cost averaging. So over here, I've got a screenshot of Bitcoin's price data from October time till today. So it's very easy to understand. Basically, dollar cost averaging is where, for example, you have £1,000 and you split it into 4 or 5 purchases instead of one. Now this could be 3 purchases, 4 or 5, whatever, that's up to you. But you would then make those purchases, for example, on a week by week basis. So instead of £1,000 today, you would put maybe £200 every week for 5 weeks, and that's your £1,000. And what happens is you get this, and this is a perfect example as to why it's so important. Because if you look at it, obviously, if you invested £1,000 here, happy days, you would have obviously been up massively, and you would still be up at this point. However, no one can time the market. This is an absolute fact. No one can time the market. Some people are very good at it, but especially beginners and kind of intermediate investors, you're not able to time the market. Let's just be honest, myself included. But if you dollar cost average, you get the best average price. So let's look at this. If you had invested £200 every week, as you can see here, different price points, I think that was about 12,000 something, 13,000, 15,000, 16, and 18.5 maybe, as you can see here. If you had invested those purchases within 5 weeks, then this is the average you would have bought in, 15,000, which is exactly here, and you would still be up. As you can see, it's still above it. It probably will still correct and go past this, but then you would only be down a little bit, as you would have got the best average price. However, if you had invested, for example, here, you're thinking it's going to break all-time high, it's going to go past 20,000, we're going to hit 25,000 before we correct, etc., etc. Then now, obviously, you would be at a loss. And that's the beauty of dollar cost averaging, because it gives you the best average price. It means you won't get the best price, but you won't get the worst price. This is the safest, most least risky method. It's recommended for all investors and for all different cryptos, whether it's DeFi picks, altcoins, Bitcoin. This is the way forward. And especially in bull markets. In bear markets, you don't want to dollar cost average that much, or at all, to be honest, because you don't want to catch what they call falling knives, which is where the crypto has not found its bottom yet, and you're just investing, but it's going to keep going down. In bear markets, you want to wait until it's over, until it starts to show kind of that it's coming out of it and it's on its way up. In bull markets, dollar cost averaging is definitely the best way forward. So I will finish this video here. Those are the two things that I wanted to talk about, mainly this, but also obviously the price action that Bitcoin looks like. Let's just go back to it quickly. As I said, that Bitcoin looks like it's going to see further movement to the downside. But the main thing as well is obviously we need to close for this week. If this does close for the week here, then obviously we've got the first weekly red candle, and then we'll see how it progresses, if it goes below 16,000, etc. But that's what it looks like, especially on the 4-hourly, as you saw here, asymmetrical triangle. So I hope you got some value from that, and see you in the next video. Peace.